Bell in New York City, just over 15 minutes away. We did erase some of the losses throughout Friday in quite a remarkable way towards the close. Coming into Monday, just a little bit of weakness once again. We're down 14 points on the S&P 500, off by about 0.5%. The attention now shifts to Europe, where Italy's anti-establishment groups surged in Sunday's election as voters punished mainstream parties for years of economic decline, rising taxes and a wave of immigration. Earlier today, Commerzbank global financial economist Peter Dixon telling Bloomberg TV that it will take time to sort out the election's impact.
What will happen now, I think, or what will determine the path of the euro, particularly with regards to Italian developments, will be what kind of government finally comes out of this. And that could be, weeks away. So markets are thinking, well, we've got other things to worry about. We've got Trump, we've got trade tariffs. Italy is actually way down the worry list for the euro right now.
Still with me around the table, Michael Purvis of Wheaton, Chris Harvey of Wells Fargo and Kevin Giddis of Raymond James. And Michael Purvis, remarkably calm. Right. In the market, full stop, outside of, let's say, the FTSE MIB in Italy and BTPs. Everything else is just okay. Does that make sense?
It does. If you scroll back, almost 12 months, to the French elections, when you really had this, resurgent populist narrative going on throughout France with Le Pen and so forth, you saw the spread of oats to Bunds rise by, 60 or 70 basis points.
Yeah.
Here, now that spread for the Italian equivalent is up about 10, right? Kind of a snooze. The V2X is not really moving. But there's, I think, a reason for that, which is that if you compare, if this process was going down in a country like Germany or France, which has a much more sort of cleaner, if you will, political architecture and processes, but,
that's a diplomatic way of putting it, Michael. Carry on.
But in Italy, you have a history of companies and for that matter, the consumer financial health being able to survive regardless of who is or who is not in office there. And so, look, this process will unfold. It's certainly muddled. There is a populist undercurrent to all of this stuff. But I think it's very important to recognize that the political risk premium that had been haunting the euro for years went out really after the French elections a year ago, and I don't see this necessarily bringing it back in. Certainly not at this point.
I want to cross over to Kevin Giddis and get his view on what's happening in the bond market.
Looks like in the pre-market, looks like it is a little bit of a struggle today.
Italian election several years ago, I don't think we'd see BTPs up 5 basis points. Is the path of least resistance for spreads still tighter and not wider?
Yeah, though we saw, a 5-bip widening between Bunds and the Italian 10s, and I think we may see a little more widening as this drags out. The Italians are making the U.S. election seem quite normal and simple, but there's still some time left to sort out who ends up being the prime minister, who rules this, and too much of the populist movement is going to be negative for Italian 10s in particular, and that spread's going to widen out. But somewhere between 135 and 140 is probably the normalized spreads for where we are since last night.
Italian politics, I think,
We got about 11 minutes before the market opens, so
making dysfunction elsewhere look like nothing. I want to cross over to get you some insight on that political dysfunction and get up to speed.
today will be a very short stream, but just because we are all invested, even with the margin, so there's not much to do, but we'll watch it for a little bit and see if we get out on any of them.
Either within the next hour or the end of the day. They don't really give a specific time frame. The main date now to look forward to is March 23rd. That's when Parliament will convene. If we do end up having a hung Parliament, which is the likely scenario, serious gridlock here in Rome, then March 23rd is when the houses will elect a leader, and that's when official coalition building will begin.
Anne-Marie, have you heard anything yet about the potential for another election, or is it still just too early?
It's just too early about another election, but we are hearing from the League, Matteo Salvini, saying that he thinks he has the right to govern and to lead the country. The League was one of the biggest standout stories of last night, John. They grew from so much in terms of the biggest party to have growth from the last election, and they really picked up a lot of votes in the South, which was quite surprising. And then, of course, the five-star movement, Luigi Di Maio, he's also saying that he should be able to govern. The five-star movement is likely to be the biggest single party, not enough votes to form a government on their own, but they are going to be the single biggest party receiving the most Italian votes. And
there's a good penny stock though, looks like.
they were very triumphant. This party is quite new, formed in 2009. First time they were in the election was 2013. It was a huge night for them. And really, the standout for me is more than 50% of Italians voted for anti-establishment, Eurosceptic parties. If you're Angela Merkel waking up, just clinching your own coalition, Emmanuel Macron looking at Italy, you have a serious populist parties throughout Italy now. And what does this mean for the whole of the Eurozone?
Bloomberg's Anne-Marie Horton, great reporting as always. No doubt we'll catch up with you throughout the day to get the latest on the Italian election from Rome. Thank you. Michael Purvis, to Anne-Marie's point, 50%, that's the amount of the economy, the amount of the electorate that have gone towards populist parties out of those that voted, and yet we sit here and talk about this rosy picture in Europe and the economy is great and everything's fantastic.
The market
have we already
opens.
seen peak growth in the Eurozone economy already this early this year?
On this peak growth issue, I mean, I think that I put out a note this morning about this, this global synchronized growth, which was really kind of the key foundation of so much risk sentiment and stock market performance last year. It's really interesting to note that since October, really coincidence with the Congress in China, that a lot of economic data in the Eurozone and China has been sort of, I wouldn't say falling off a cliff, but it's been into a weakening trend. Now, after, substantial growth, some consolidation and give back, to be expected. But I think the question then gets to, how does the market process the European political dynamics that we're just discussing, along with the Trump tariff discussion? It's coming at a little bit of an inopportune time, and I think that's going to lean on risk sentiment, particularly since valuations are hardly a bargain here.
Kevin Gillis, I just want to get your insight on that particular topic. A lot of enthusiasm and optimism around the European story, but the data has started to roll over a little bit from these big highs that we've seen on the PMI, say, in the previous few months. Are you confident that the European trajectory is still higher here?
Well, it's definitely higher. Until you get a real inflationary component, you're not worried about overheating the economy in Europe. And so I think there's still room to go. If you look at, it took them in order, the U.S. being the first to recover, the first to see inflation, and then probably the Eurozone first to recover and first to see inflation, and then falling way behind it would be, Japan in particular. So I still think these economies still have room to grow.
So,
And,
as we can see,
still
in the pre-market, all the stocks are like really struggling.
Kevin Gillis of Raymond James, it's been great to have you with us on a program.
So the only thing that's good so far is like that penny stock, but with us being kind of tied with our money, so I can't invest into it anyways.
That's next in our morning calls. And the market's about 8 minutes away from the opening bell. The story as follows. Futures just rolling over a touch more ahead of the cash open. They're down 0.6% on the S&P. Dow futures down almost 0.7%. From New York, this is Bloomberg.
Buyers are backing off on Amazon, looks like right here. Just keep backing off. Sellers. Amazon on this 5 minute in the pre-market, it's kind of like consolidating right here, so it's struggling pretty good though. Start really low right here, so that's not good.
About 6 minutes away from the opening bell, futures looking a little soft after a week of losses. We're down about 0.5% as we approach the cash open. It's time now for some morning calls, a look at some of the big movers on the back of analyst recommendations. This morning, first up, we begin with Morgan Stanley upgrading shares of Groupon to equal weight from underweight. The analyst saying the sell-off is now overdone, creating limited downside risk following Groupon's 16% decline so far this year. Next up, Deutsche Bank upgrading Valiant to a buy from a hold with a $20 price target. The analyst saying Valiant is doing the right things to strengthen its business by reducing legal liabilities and strengthening its balance sheet. And finally, lastly, we go to UBS raising its price target on Netflix to a street high $345 a share. The analyst over there saying that Netflix is better prepared to compete in the long term as it continues to acquire and license new original content. There's some of the morning calls this morning here in Wall Street, on Wall Street in New York. Let's get you up to speed on some of the price action cross assets, shall we? About 5 minutes away from the opening bell. Last week's decline trimmed to about 2% on the S&P 500. This morning, as we begin a new trading week, futures looking soft here, down by 0.56% on the S&P. The Dow off by 0.6.
We got about 3 minutes.
In the bond market, the story as follows.
Just kind of watching the stocks. That's all that I'm doing right now. There's not much to do today, but it's okay.
And just remarkably muted in the FX market. The euro, political gridlock in Europe. We've heard this so many times, and yet the euro is unchanged against the dollar at 123.18, and dollar yen going nowhere at 105.72. From New York, the opening bell just around the corner. This is Bloomberg TV.
Amazon and Apple both are struggling pretty good right now, so I'm down a little bit today on my stocks. So the European and Asian markets, they went down as well. Look at that drop right here of Apple though. It's a big drop. Alright, the market's just opened. Apple here trying to climb.
about 25 seconds away from the opening bell and the start of a brand new trading week, with futures just a little soft after a week of losses of about 2% on the S&P 500. Futures at the moment down about 150 on the Dow, call it 0.6%. S&P 500 futures negative 0.55%. The story elsewhere as you hear the opening bell ring in New York City. We aren't even talking about payrolls on Friday yet. We're still talking about trade and a bid into treasuries with
Alright, CVX went up in as soon as the market opened, so that's good.
Across G10, euro dollar at 123.20, and elsewhere crude receiving just a little
Apple's
bit of
trying to climb. Amazon's really struggling though.
$61.29. With me around the table is Michael Purvis of Weaver and Chris Harvey of Wells Fargo. Chris, you called it about a month ago. You came on this program and you said, get ready for the vol, get ready for the rollover. I call people out when they get it wrong, so let's give you the credit. You got it right. Where are we going next and what was driving it?
So where we're going next is we're going to continue to see these volatility spikes. What I'll say is the average.
Alright, so the Dow is down, Nasdaq's down, S&P 500 is down.
Pretty good decay, but there's a lot more uncertainty today. And so we're seeing uncertainty with the tariffs. We're seeing uncertainty with monetary policy. And what you would expect is things need to stand on their own, and that causes more volatility. And what we're telling people is this is the old normal. Expect it to be here for some time. It'll be choppy.
Mark Purvis?
I would completely agree. I think as you go through this transition from
Here's Apple really trying to climb right now, so this is great for Apple. Apple is green.
Fiscal stimulus such as the tax bill and potentially with infrastructure, that process of transition is inherently volatile. The room for policy error from the Fed, the room for
That's good that Apple is going down, because both Amazon and Apple, you know, they're tech companies, so they're trying to help each other. You know that Amazon is down and Apple is struggling here now, but
I don't think the average is
it's
20.
trying.
I think the average of 10 is over. That's over.
Yeah.
Now the question is it 12? Is it 14? Is it 15? We really don't know at this point in time.
Yeah, I mean, if you're a VIX trader, where do you sell the 12 put? Do you sell the 14 put? Do you sell the 10 put? You know,
But what's your base case? What's the strategy?
Well, I think what I hate to be boring and keep agreeing with Chris, but I think what's happening here is that with rates, the VIX floor is moving to a higher price.
All right, here's Amazon curving a little bit.
It's hard to be so precise at this point whether that floor is 12 or 13 or 14, but I feel highly confident saying we're not, those days of 9 prints are behind us for a long period of time.
I had a big conversation.
This is good for Apple right here again.
About why you should hold treasuries still for risk mitigating purposes, and Kevin Giddis kind of weighed in on it a little bit, Chris Harvey.
Yeah.
And a lot of them were questioning whether treasuries have those
Good,
attributes
Apple broke
anymore.
up.
Weigh in on that debate because I think it's an important one.
So in the equity market, there are two big risk aversion strategies. One is low vol, the other one is quality. One is tied to duration, the other one's tied to credit.
Chevron will struggle right now again,
higher
but
quality because it's tied to credit. Credit spreads are historically cheap, and they can go sideways or wide. The issue with low vol and the issue with any sort of duration is rates are still historically low. The risk to the upside is significant. We don't know if we're going to get there, but
second green on Amazon, so that's a good sign.
The market is, you're right. The relationships that we've seen in the past, the typical relationships, aren't there.
A little struggle here, but MACD did cross.
Better stewards of capital, high ROIC.
Still decent here.
Secular growth stories. That's where we want to be placed.
Well, secular growth stories are in the FANGs, aren't they?
They
so
are.
You're telling me the safety, the allocation to safety right now is in growth equities.
It's not a value market. There's no value in value at this point in time. If you look at value, value is negative this year. And growth indices are up 5%, momentum indices are up 6-7%. That's where the
So on the stochastic on Amazon, it looks like it wants to cross here to go up.
I think it'll continue to work. And
So that's good.
It's not expensive.
It's going to help the MACD.
There's too much risk in value.
Just to build on what Chris said, in 2016 and 17, FANG stocks, tech stocks would trade well with weaker economic data because on the presumption that they could keep growing irrespective of the economy. And I think, what I put out a piece a couple of weeks ago saying, that FANG/tech is, they're all-weather stocks because if you're in a higher inflation, higher rate world where they're not levered companies, their cost structure is not really exposed to the more conventional inflation metrics there. And so they're going to, I think they're going to be, they've been leaders through this volatility. They made a fresh high.
A little struggle on Apple and a little struggle on Amazon.
And I think they're going to continue to perform, not just here, but also in China.
So, just two more thoughts. One on utilities, one on energy. With the utilities, they've underperformed 20% since September. That's a lot of bad news priced in. The other thing is you're starting to see secondaries. So a number of the companies have to do secondaries because of tax. Once they get through that, their properties or the principals may change, and that's something we're starting to look at. On energy, and it gets back to FANG, you look at the energy stocks, and the fundamentals or their earnings reports weren't great, or rather lackluster. The stocks have traded off. In addition to that, you have...
And both are struggling, so
as a PM,
not good.
A lot of the PMs are sitting back and saying, why do I want to take on that kind of risk? I'm just not getting the reward for it. And that's why you get back to technology.
So wait, the question I'd be asking then is, okay, we enter a higher volatility regime, but what else has changed since
Apple just
2017
broke down a little bit
2018
more.
as far as your
I mean,
allocation?
Amazon.
Not much. What we're seeing is active managers are performing quite well. They haven't moved around. They're still long momentum. They're still long growth. They're still long technology. And it's working. So why change? Why put on that type of risk? You're not getting paid for it.
Michael?
If you look at the the growth to value ratio, continues to move from the bottom left to the upper right. You couldn't even tell a difference from 2017 to 18, despite all these so-called regime shifts happening there. So I think that's going to continue to get a bid. On the value side, I mean, financials. I've been overweight financials since really late last summer. Continue to be so. Those are there's a lot of value in those companies. I think they can check enough boxes to continue to get support going forwards there. I think that the value to growth discussion it can get very nuanced about when you're talking about value. Chris makes an excellent point about energy stocks. Do you want to take on the commodity risk and so forth after so much underperformance? But bank stocks on the other hand could be continue to be decent performers here.
This Monday morning, March 5th, the story as follows. 6 minutes into the session, a slight pullback here. We're down a third of 1% across the board. Let's get you some movers, shall we? And cross over to Abigail Doolittle. Abigail.
Well, on this Monday, John, we do have some M&A action. Check out the shares of XL Group.
Okay, Amazon's kind of like they're going down, but they're going down pretty slow.
The largest provider of commercial casualty coverage.
It is breaking down more here.
Weather that has now put premiums at a
Apple
high. So you would think that AXA would be trading
back
higher,
down.
but that share is plunging. Those shares plunging in Paris, down 10%. Analysts like the deal, but they say the price paid is too high. Turning to one of those FANG stocks, John, that you all were just talking about, Netflix. Take a look at Netflix, up 1%, outperforming the broader markets in a big
1%?
way.
It's only less than 1% now, lady.
Saying that the company's original programming is a positive, the broadband and wireless distribution deals. In fact, UBS now has a street high price target of $345, suggesting this stock could have 10% upside ahead. And then finally, the
Alright, here's Amazon Big Green right here, so that's good.
Is probing that $17.3 billion takeover bid. This at the request of Qualcomm. We have Broadcom slamming the company for that. And of course, it means that Qualcomm's board meeting that was set for tomorrow to vote on new board members, some of them could be from Broadcom, has been delayed by 30 days. The saga, the soap opera-like saga, John, just continues here for these chip makers.
Abigail Doolittle, great work. For more on these chip
Started
makers,
up higher, so that's good here.
Internet analyst, he has a buy on Qualcomm with a $75 price target. Romit, doesn't this just delay the inevitable?
Green right here for Apple, so that's both are good.
Broadcom becomes a US domiciled company, which is literally months away. This conversation around CFIUS is dead, isn't it?
You're exactly right. I mean, time is up for Qualcomm, and it's a question of when.
Romit, if it's a question of when, what are Qualcomm playing at? And if you're an investor in this
Another
company,
good green here for Amazon. Chevron, a little struggle still.
Look, the company is, and I'm talking about Qualcomm, is trying to do everything they can to protect their fiefdom. In January, they announced a $1 billion restructuring plan. In February, they raised their bid on NXPI by a substantial amount. And then today, we've come to learn that they instigated a CFIUS review. Here's an interesting stat, though. The top 5 executives over the last 3 years have earned about $130 million. That's $9 million per executive per year. If you look at the stock price, though, for measuring their performance on shareholder return, if you put $1,000 in Qualcomm 3 years ago, it's worth $900. If you put that $1,000 in Broadcom, it's worth $1,900. So, this performance is obviously magnified if you're a top 10 shareholder with a $1 billion position in the company. And I just think, you know, when this vote ultimately
little
comes
struggle now on
through,
boats.
whenever it happens, whether it's in a month or in a year,
Stochastic here is trying to climb. He's trying to curve up on the MACD, but it's going slowly.
The shareholders aren't, and that's typically usually always a problem, Ramit. I just wonder, what is their argument now? They're looking for a poison pill in a bigger bid for NXP, a poison pill by getting on the phone to CFIUS. What's their basic strategic argument to remain as a standalone company, and who on earth does that resonate with as far as their big investors are concerned right now?
I mean, their argument to the street is that you know, that they can double earnings per share in a relatively short period of time. And once this NXPI deal goes through and they settle some of their disputes they have with Apple, that you know, the share price the share price performance will improve. But in my opinion, it's not about what Qualcomm management can do; it's about what they've done. And if you look at the results, I think most investors will say your time is up.
So why have you still got to buy on the stock, Ramit?
Well, I think a deal's inevitable, and so you've got a stock here trading in the low 60s with an offer price from Broadcom of $79 per share that has the potential to maybe move up $1 or $2. While you wait, you're collecting on a 3.5% dividend, and you know, in this market with this volatility, I think that's pretty interesting.
Ramit Shah of Nomura Internet, always great to catch up with you, sir, to get your insight on that saga between those two companies. Michael Purvis, CFIUS getting involved. It's always nice to get on the phone and have the government have you back.
Both are struggling right now, so
I imagine we're going to see a lot more of this.
not good
Whether you get
there.
on the phone to them or not, there's going to be
Chevron's still struggling.
in the United States, making cross-border deals a whole lot more difficult. You anticipate that?
Yeah, not much is happening. Even that penny stock that was up like 60-something%, they've gone down more than 10%.
Large corporate M&A, if you go back through history there. You know, there's no question that, you know, from a, you know, if you're a high-powered Wall Street guy who has some
CHK is up a little bit, but
you know, you want the free markets to be to work,
27 cents.
to be valued and so forth. And I don't know how much bang for the buck Trump would get from, how much of a base play is it to block foreign M&A? Certainly,
in the
if there's
40s, that
very
penny stock
strategic,
now.
right, you know,
Which we assume they think
from
semis
China
right now.
into
They think semis right now is really strategic, and they also are looking very, very closely about the money in the M&A spree coming
Apple
from China,
broke
Chris.
down below their
And
low
I think
of today.
That's right. I think that's fair. You're going to see a little bit more. The magnifying glass will be closer, and it won't be rubber stamped. And there's certain industries and certain stocks that are more believed to be more strategic, and that's maybe a no-no. We'll see how it all pans out, but it's a major concern.
Chris Harvey, outside of this, when you were last here, you pretty much called the top. So what are you calling now? Conviction trade going into all of this.
So we think this is a viable pullback. If you look, you now have a free look on earnings. Earnings are better.
Yep.
Valuation is better. If you look at M&A is starting to increase. Sentiment is better. The Fed is hawkish at the margin, but not hawkish. And even though rates have gone higher, the 10-year is still below 3%, and investment-grade credit spreads are less than 100 basis points. These are all very positive, and longer term, we think you're going to make money to the long side.
Chris Harvey of Wells Fargo, always great to catch up with you as well, with Michael Purvis of Whedon. In the markets, about 13 minutes into the session this Monday, the story as follows. We are softer by just a third of 1%.
Alright, this is good for Amazon that it's back up here. But again, if you look right here though, it's just right here and right here. That's its channel that it's in. Price channel. More about right here to right here though, instead of so high, but yeah, right here. It needs to break that. Then it can start climbing more, about 93. Looks like it may do that here soon. It's just consolidating until then. Same thing with Apple. It's consolidating right here. MACD trying to cross. Where did it start on the 5-minute green? Okay, that's good. touch that right there, so. Again, guys, this is going to be a really short stream today because we are kind of tired, so not much to do. Chevron is back green, so that's great. Apple went back into 175, so that's good. Hopefully we can see it go back into 160 and 76s. Sorry, 176-ish. See Amazon hit over 1500 again. Well, let's hope for that. Again, it touched that top and then it went right back down a little bit. So I think it will break it in a minute, but it just needs a little time because look at the MACD, they're just touching each other, so it just needs a little bit more time there.
About 16 minutes into the session here in New York City, the story cross asset as follows. Just a little bit softer on equities, down about 0.5%, a third of 1% to be precise. In the bond market, the story looks a little something like this as trade tensions continue to rise. Treasuries keep that bid with yields coming down by about 2 basis points to 284. And you've got to say in the FX market, really muted.
Chevron down less than half of a penny. There, it's up 4 cents.
The Chinese conglomerate H&A Group laying the groundwork to sell its stake in Hilton spin-off Park Hotels and Resorts late last week. This just H&A's latest move to unwind.
We'll probably stop the stream at 8 o'clock.
Over the past few years, H&A also owns a 25% stake in Hilton worldwide, but is restricted from selling those shares until next year. I'm really pleased to say that
so far though, yeah, I know I'm using margin on Amazon, but it's only charging me like $1.50 per day, and it's only charged me for today because today is the settle date on there, so it's $1.50 that I owe on there that will come, but I'll hold it a little bit longer.
By the way, thanks for having me on. As you might imagine, we're well aware of the news on the decision that they made as it relates to Park and the agreement.
So far, anyways, we'll see what it does. If it decides to go down a lot, I need to get out.
That guides the relationship we have with H&A.
Just consolidating.
We don't comment on any of our shareholders' holdings, H&A or otherwise.
Well, Christopher, I just wonder how you respectfully communicate to the rest of the investor base when your largest investor is H&A with a sizable stake of your company. What can you say to the investor base then? Nothing?
Well, I mean, I can't say anything right now other than, as I said, we have a shareholder agreement that
both are going down a little bit now.
But then what I can tell them is that everything is continues to go exceptionally well at the company. You know, what we're seeing with broader economic growth.
And then MACD is kind of a struggle there.
Be more optimistic about what's going to happen from a same-store growth point of view this year. We continue to lead the market in unit growth with more rooms under construction.
Looks like I may do a breakdown on there.
Company on Earth that's going to add to that. We expect to again produce a huge amount of free cash flow this year that we intend to aggressively return to our shareholders, and so. Everything in terms of what's going on with the fundamentals of the industry and specifically what's going on at Hilton, I'd say, is quite good and lots of reasons to be optimistic. What ultimately H&A does...
Apple really took a hit right here. Both of them are going down.
So, you don't see this as a cloud of uncertainty, sort of
both of them are doing like the exact same thing right now.
Well, I mean, of course it creates some uncertainty, and it's been a question that we've had from lots of investors, as you might imagine. Not every investor, but lots of investors. And so, again, I can't really comment on it other than to say it will eventually resolve itself. And in the interim, it does create a little bit of uncertainty, and there's not a whole heck of a lot that I can do about it.
Well, Christopher, at the moment, there's a lot of uncertainty on the international stage that I assume you can't do much about either. You yourself, the stats are amazing for Hilton. 1 in 5 hotel rooms under construction. They're tied to the Hilton brand worldwide. How uncertain is it as a CEO to really plan for that kind of expansion when we see these kind of tensions between not just China and the United States over the last week or so, but China and allies, China and Europe, the likes of the United States and allies, the US and Europe, US Japan, US Canada?
Yeah, it's an important question. I think in terms of the so-called, trade wars that might or might not occur, I think it's
Amazon breaking below down their channel.
News over the weekend. My hope is that calmer heads are going to prevail.
I think you'll see Apple go down a little bit more too then.
A complex negotiation, but in any event, time will tell. The nice thing about our model, John, is that we're not investing our money in these various locations around the world. All of the hotels that you described, 1 in 5 hotels under construction in the world has a Hilton brand name on it. 100% of that is being done with third-party capital. It's with local owners in markets like here in Berlin, or you mentioned China. Wherever the case may be, it's really dependent on third-party capital. We do not invest in the real estate side. As you know, we spun out our real estate business a year ago. But even before that, all of our growth was really being driven by third-party capital investing in the real estate. And so in the various locations around the world, as I think is demonstrated by the robust nature of our pipeline and the growing
Amazon struggling.
People still have a lot of confidence in where things are in the world, even though there's a lot going on and there's a lot of rhetoric back and forth. I think underneath it all is broader growth in most places around the world and globally on a GDP basis getting a little bit better, not a little bit worse. So we'll have to see what all the latest machinations related to the trade issues play out for over the next days and months, but I'd say the underlying trend is quite good.
Is it quite good? And I'll ask you the following question, just politically speaking. Do you think you can reconcile the America First objectives of this administration with the goals of Hilton? Are those two things
I'm fine to stay in, I think.
Listen, I'm a well-chronicled believer in globalization, and so our business
wants to cross here again,
across the globe, and
possibly here. Green. Doing the same thing right there. So.
Presumably it does.
Excuse me?
Presumably that puts you at odds with this administration then.
Not necessarily. Again, everybody, all administrations have sort of a different style of how they get things done. I think, this administration is doing it in a way, I think, that is part of a complex negotiation. I think in the end, globalization is here to stay. I think it's going to be beneficial for our business. And I think notwithstanding America First as a starting point, I think America is going to ultimately be, over the long term, a responsible trading partner in the world for all of our major allies.
Christopher, before we lose you, as you sit in the heart of Europe and say Berlin, what is the argument for free trade and globalization at this point? As a multinational company that you lead, what's the argument for it?
I think the argument for it is ultimately it's going to give all the economies around the world incremental growth over time, and it's going to create incremental jobs around the world. The more that globalization takes hold in a sensible, constructive
So I'm looking at a 100-day chart here on Apple. When it recovered all of that loss, as soon as it did, then right here on the MACD, it kind of flatlined. And now the histogram has been going down a little bit. So that's been a little bit of my worry there. But stochastic also dropped a lot. So I feel like it may make it so it bounces and then goes back up right there. So this isn't that bad right here, because it kind of needed it after that big of a movement back up. Let's check out Chevron though, because I know a few people are in there. Chevron, they're green right now. They are trying to climb. The MACD right here, as you can see, it did cross back over here. It has struggled a little bit, but it's still trying to climb up. Now the stochastic though, on the other hand, it is at a point where it could very soon turn around. So it looks like it is curving a little bit right here. So That's very good for us. It's curving to come back up. Alright. And then Amazon right here. It's good that it's climbing up like that. 5 minutes. Decent right here. Alright, 100-day chart for Amazon. It did cross here to go down, but it's just been consolidating. So it's a consolidation down of a MACD. Now the stochastic here though, it is a little bit lower. As you can see, it's kind of around the point where lately every time it's been right there, it likes to try to climb back up. So it is like a little curve right here. So we may see it turn around here like this, right here. So this isn't bad, because with the consolidating and then going down, right. If I put my mouse over here though and see this line right here, if it were to go down below, right here, this low, right here is another support area, is the 1450, but the better one is about 1478. That's a support on there, so that's why it was bouncing back up over here. It's getting ready, because it was getting ready to touch it, and then it just didn't want to do that, so it went back up. So this isn't bad either, just may make it so I hold on to it a little bit longer. We got about 2 more minutes before the 8 o'clock hits, so let's go back to Apple here. A little red right here. To go down a little bit. Amazon still trying though, even though it's doing the kind of like the same thing. Some stocks are trying to come green. Netflix was green earlier, but then went down. Twitter is up. So Netflix is doing Christmas colors right now, just switching between red and green. A little red on both right here. I'll watch it for another minute and then we'll probably end the stream there. But overall guys, from what I'm taking off, it's just today's just a small little consolidation day, and I'm gonna hold on to it. So I'm not worried about this. Alright, Chevron's doing pretty well. Good green here for Apple. Look at that, it broke this line a little bit. Oh, looks like it needs a little bit more of a push there. It did break it for a second. It's a little bit more. There we go, it's gonna try again. It's right at that line.
It's 10 a.m. in New York, 3 p.m. in London, and 11 p.m. in Hong Kong. From New York, I'm Bonnie Quinn.
A little red here for Amazon, but that's okay. Alright, but I am gonna end the stream here, guys. Even though some stocks went up, most stocks went down, and it's just in a consolidation period, I'm gonna hold it, and then I'm sure it'll go up here very shortly. So I'm completely fine with that. But I will be back on tomorrow again, guys. That keep in mind that it's still gonna be a free stream tomorrow for any friends. It will be the last day for it. So if you do have any if you do have any friends that do want to watch it live, let's see if we can get out of our stock tomorrow and do an actual day trade tomorrow. So we'll see how that goes. But you all have a great rest of your day, and best of luck. Thank you.